Well, as was widely expected, and certainly it was the Westpac forecast, the Reserve Bank held rates on hold again at the September board meeting. If anything, they were a little more confident that they were on top of inflation. They were less concerned about the tightness in the labour market. And they also raised the issue about concerns about the impact that China is having around the world. And of course, Australia is right at the centre of any issues around China. So that gives us even more confidence that the Reserve Bank is going to remain on hold for quite some time. And as you know, because we're right at the peak now of the period where people are switching from those very low fixed rate loans that they acquired in 2020 and 2021 into the much higher variable rates now, that means that for the next 6 months or so, the average mortgage rate in the country will actually keep rising, despite the fact that the Reserve Bank isn't going to need to raise rates any further. The other big issue that we mentioned is that when we think that the Reserve Bank will start to actually cut rates. Now that's going to be quite a while. We don't think that'll happen until the board meeting in August next year. Inflation will come down to around 3.9% by the end of this year. That won't be good enough. We think by August it'll be around that 3.4, 3.3. And with unemployment having risen from 3.5 to 4.5, I think the time will be right for those rate cuts. We expect Australia will be cutting rates in August next year, but we still believe the Federal Reserve in the US will cut rates as early as March next year. But we do believe that the pace at which the Federal Reserve will cut rates will be slower than we had been expecting in the past. And what that means is that the rise in the Aussie dollar we're expecting next year in response to the Fed cutting rates, China looking more encouraging, and the world economy overall prospects being more positive, we do believe that now with the Federal Reserve not cutting rates as quickly, then the strength of the Aussie dollar we're expecting next year has to be scaled back. So we did think that the Aussie dollar would reach 74 cents by the end of next year. Now that's now been scaled all the way back to 70 cents. We believe that by the end of this year, we did think 68 cents. We're now down to 66 cents.